Did you know that nearly 60% of people face unexpected expenses each year? Whether it's a car breakdown or a leaky roof, unexpected events can quickly take a financial toll. In today's video, we're diving into the importance of having an emergency fund and how it can save you from financial stress. Keeping a reserve of cash on hand in case of an emergency can be incredibly useful, and we'll show you how to build and manage your fund effectively. Let's get right into it. First of all, it is very important to understand the importance of an emergency fund. So what is it? Having an emergency fund is crucial for maintaining financial stability during unexpected situations. Here are some common scenarios where an emergency fund can make a big difference. Medical emergencies. If you suddenly fall ill or need an unexpected medical procedure, the bills can add up quickly. An emergency fund ensures you can get the necessary health care without stressing over the costs. Job loss. Losing your job can be a tough blow, both emotionally and financially. An emergency fund provides a cushion to cover your living expenses while you look for new employment. Natural disasters. If you live in an area prone to natural disasters, having an emergency fund can help you with evacuation, temporary housing, and other essential needs during such events. Urgent travel. Sometimes family emergencies or unforeseen situations require immediate travel. With an emergency fund, you can book tickets and arrange accommodations without delay. Business emergencies. For entrepreneurs or business owners, unexpected expenses, economic downturns, or operational challenges are part of the game. An emergency fund can help you navigate these issues and keep your business running smoothly. The next step is then to figure out the right size for your emergency fund. While there's no one-size-fits-all answer, a good rule of thumb is to have an emergency fund that covers 3 to 6 months of your monthly expenses. This can vary based on your income and costs. If you have an unstable job, it's wise to set aside 6 to 12 months' worth of your salary as an emergency fund. For instance, if you earn approximately $400 per month and spend $180 on regular living expenses, your emergency fund should ideally be between $700 and $2,000. Are you now wondering what to include in your monthly expenses? Then there are some essentials: rent and maintenance, mortgage, utility bills, food, transportation, insurance, school fees, staff salary, grocery bills. Also, if you spend a significant amount on subscriptions like gym memberships, streaming services, etc., make sure to include those as well. Now, to the biggest question: where should you park your emergency fund? When it comes to choosing where to keep your emergency fund, accessibility is crucial. Depending on your specific needs, you might consider assets with different lock-in periods. Some options include tax-saving fixed deposits, provident funds, and government bonds. To help you make a better decision, here are some of the best options for storing your emergency fund while ensuring easy access. Mutual funds. Mutual funds, especially liquid funds or overnight funds, are great for storing emergency money. They offer good returns within a short time frame. You can choose from a variety of options based on your risk-return perceptions and investment time frame. Certificates of deposit, also known as CDs, offer a higher interest rate than other bank accounts. Unlike other options, you need to keep your money in the account for a set period in exchange for a guaranteed rate of return. Once the CD matures, you can withdraw your initial cash along with the interest earned. Swept-in savings accounts. These are pretty cool because they let you invest excess funds in a fixed deposit. If you need the cash, you can withdraw it easily, though there might be a fee. This way, your fund earns better returns than just sitting in a regular savings account. Money market accounts. These accounts are a mix of checking and savings accounts offered by banks or credit unions. They're low risk and great for an emergency fund. Plus, you can access the funds immediately with a debit card at some banks. Roth IRA. A Roth IRA can be a good option for retirement savings. It might help you earn more than a typical savings account without taking on too much risk. That's not it. Because you should also know how to maintain your fund responsibly. So here are some tips you can follow to use your fund wisely. First, you need to set a goal. Creating an emergency fund involves figuring out how much you can afford to save each month. Take a look at your current budget or create one to simplify the process. This will help you understand how much money you have left over to save after covering necessary expenses like food, insurance, and utility bills. Then, you need to automate your contributions by setting up recurring transfers through your bank to have money sent from your checking account to your savings account regularly. Once the transfers are set up, you can choose the amount and frequency, ensuring that your contributions remain consistent. The next important step you should not neglect is to keep your funds accessible. Make sure your emergency fund is easily accessible if you need it. Swept-in savings accounts and money market accounts are good options since they offer better returns and easy access to your funds. Roth IRAs can also be considered for retirement savings, providing potentially higher earnings with minimal risk. Also, don't forget to periodically review your emergency fund to ensure it meets your needs. Adjust your savings goals and contributions as your financial situation changes, such as a new job, a raise, or additional expenses. By setting clear goals, automating contributions, keeping your fund accessible, and regularly reviewing your progress, you can maintain your emergency fund responsibly and be prepared for any unexpected expenses. Lastly, regularly monitor your progress. Whether it's setting up automatic notifications for your account balance or consistently recording your expenditures, find a method to track your progress. This can provide immediate gratification and serve as an incentive to keep going. Monitoring your progress helps you stay on track and make adjustments as needed, ensuring that your emergency fund continues to grow and meet your financial needs. How to use your fund wisely. You should use your emergency fund in situations that qualify as genuine emergencies. These are unexpected events or expenses that require immediate attention and can potentially disrupt your financial stability. Here are some common scenarios when it's appropriate to use your emergency fund. Medical emergencies, unexpected health issues or accidents that require immediate medical attention. Unemployment. If you lose your job and need funds to cover essential expenses until you find new employment. Natural calamities. Events like earthquakes, floods, or storms that cause significant damage and require immediate repairs or relocation. Sudden travel plans. Urgent travel needs, such as attending a family emergency or funeral. Death of a family member. Expenses related to funeral arrangements and other immediate needs. Business or legal emergencies are situations that require immediate financial attention, such as legal fees or urgent business expenses. Car or home repairs. Unplanned repairs that are essential to maintain your daily life, such as fixing a broken furnace or a major car repair. Take control of your financial future. Having an emergency fund prevents you from falling into a debt trap, mortgaging existing assets, or liquidating future assets like retirement funds. However, the key is to refrain from using these funds for non-essential expenses, no matter how tempting. Lastly, avoid investing your emergency funds in risky assets since you might need them at a moment's notice. By using your emergency fund wisely, you can maintain financial stability and be better prepared for unexpected challenges. Thanks for watching. What financial topic are you most curious about and would like us to cover next? Let us know in the comments.